With that, let's go ahead and get started. Thank you so much for coming on. Let me introduce Miss Marilyn Williams. She's going to be our host this evening. Oh, wait a minute. Before I give up the host, let me do something real quick because someone's jumping on that I got to put on blast real quick. Miss Charlie, let me know when you can hear me. Can you hear me, Miss Charlie?
Yes, I can hear you.
Okay, so before I hand over the mic, let me let y'all know who Miss Charlie is. Miss Charlie is my 100th subscriber on my YouTube channel. So thank you so much. I had to get her on here just so I could say that live. So with that, I'm gonna decrease Marilyn. Miss Marilyn, you got the mic. I'm done.
All right. I just love Tony. Don't you guys wish you could take his energy and bottle it and sell it and make $1 million? He just has so much energy. But I thank him for this privilege of that he's given me to host tonight. And the main thing that I am to do is to introduce our speaker for tonight, our presenter for tonight. And you guys are in for a treat because our presenter for tonight, she's another one with lots of energy and she has lots of knowledge. She knows so much about the financial industry. She's been in the business for, I think, probably about 20 years. I've known her probably for about, I'll say over 30 years. So I could tell y'all some secrets about her, but I'm not going to do that tonight because what we're here for tonight is to learn about financial concepts, which she is well versed in. Linda Kinion is a person who you will just grow to love because Linda is kind hearted. She wants the best for everyone. And she's going to present things to you tonight that's going to help you. So if you will listen to her and pay attention, you will gain a lot and you will learn a lot. So without further ado, I just like to present to you guys Miss Linda Kenyon.
Thank you so much, Marilyn, for that wonderful introduction and all of those flattering things that you said. We are gonna carry on without Tony being here the whole night. I'm just feeling honored to be in this position. The workshops he's been doing has been wonderful. Thank you all for continuing to follow. I know you're getting good information, and tonight should be no different. So so Tony, thank you for letting me be in the lineup. Um, First things first, and this is something I think Tony always does. When you come to an event like this, a lot of times you're going to have a question or two that you're seeking an answer to. And so we definitely don't want you to come in and not get an answer to that question or those questions. So if you do have questions, go ahead and jot them down right now. And then once we've gone through the information, if you haven't gotten an answer to that question before it's all over, then we definitely will address it at the end, if that's okay with you all. And so tonight we are going to be talking about money. This is something that I do enjoy sharing with people because I have a lot of concerns. There's a lot of things going on in the world, and I have some concerns that people's money is just not going to be where it needs to be. And I definitely do not want that to happen on my watch. And I do believe in being intentional about getting information. So with you all being on this call tonight, I already know something about you, not really knowing you personally, and that is that you prioritize something that I think isn't a priority. So that speaks volumes that you took out your time and you were intentional to show up here tonight. And I want to go ahead and get started. Let me, the technology part is always a concern, so I can see everybody and admit her. Okay. And so what I want to do first of all, let me bring up a document first that I want to go ahead and start with that. And then we'll get into the presentation. Let's see. I need to share my screen. There it is. Okay. Share. Hope I can share my screen. Okay, let's see. Try it again. Um,
Those technical
okay.
difficulties do happen. Don't you worry. It's all right.
I know. And I've been working with this all day. So let me think here. 1 second.
Don't
I
worry, everyone. She's just building anticipation. This is on purpose.
Oh gosh, let's see. I just did it a moment ago. Uh, share. Okay, I see share. I'm clicking on share.
Mhm.
And now I need to capture it. Let's see. Let me try this. Hmm.
Yes, yes, ma'am, Miss Morris. Understood.
Well, I'm not sure what's different than just a moment ago. Share.
You have it open on your back screen right now?
Yes.
Okay.
So that's probably,
Open it up on your back screen and then try to open it up through the Zoom after that.
but then I don't have the share button anymore. It took away the share button. Let's see. That's the video. Let's see.
Okay, well, while you're working on that, work on that for a couple of minutes. I'm going, before I go downstairs, let me tell y'all what I'm doing down here in Denver, Colorado, because I'm really excited about it. So there's a convention going on here, an expo, if you would, and we're all, basically all the financial professionals, public accountants, and basically people that want to talk about money. And standing around a room full of people who are really out here doing it big in this industry is a big deal. But what I'm really excited about is the publisher is here. So the publisher that's going to be writing my book is actually here. So I'm going to be meeting up with him so I can be able to get that closed out before the end of this month. So one of these presentations you're going to see me even more excited, and I'm going to hold up a book with my name on it. So Dr. Christopher, I'll be able to put one of my pages on your wall, to be able to, share in some of that glorious backdrop that you got over there. And I can already see a few things that I'd want to, take off that wall. So if it's missing, it wasn't me. That's all I want to say. It wasn't me when it comes up missing. So right now, as Linda's having a couple of challenges getting this presentation done, the good
You
thing
can't
about
take my Guinness World Record though.
what is the Guinness World Record about?
I one of my mentees and I we broke the world record for how many baseballs we can throw in a minute.
Are you serious? Well,
And it's right there.
well, how many was that?
We did 38 in 1 minute.
38, 38 baseballs in 1 minute.
Thrown and caught. Yes.
I
I'm
can
a
do that in 10 seconds, Dr.
I'm a
Christopher.
world record holder. Official world record holder.
I love it. Well, we're going to have to talk about that. But again, I'm going to go ahead and decrease because it looks like Linda's got at least her desktop showing here.
I hope
And
y'all can see that. Can y'all see that?
I can see the calculator right now. Yes, ma'am.
Okay. All right. Sorry about that, y'all. It worked just a moment ago. I wanted to go ahead and start here
Okay.
because, like I said, I do have some concerns. And my concern is that people today, it was assumed to be the case in times past, but in this day and time, I'm really concerned that people are not going to be able to retire. And so that's something that I want people to be able to do. if that's what they want to do. And there's already an article out that came out in October of 2017 that says by the year 2053 that Black Americans would be at zero net worth. And then 20 years later, the Hispanic community would be at zero net worth. And you know how many people that is, you know, if it's zero. And so I don't want that to happen on my watch. And so that's what this informational session is about, making sure people have money at the time they need to have money. And so this is a what if calculator. And so I wanted to kind of give you an idea of what kind of money we're talking about that you need to have, because I just feel like people understand that that you're going to need, you know, to have a certain amount. So this is a what if calculator. And if you'll notice here, it's asking for the equivalent that you want to withdraw or that you want to have available to you at the time you retire. And so you need to know how much you have in expense, because you will want to have at least enough money to cover your expenses every month. So I'm just going to use an example. I probably have in expenses, I'm going to need at least $5,000. And that's probably Texas money I'm talking about. I don't know people in other states, which are cost of living. But say if I have $5,000 in expenses, and this is not my age, but I don't want to put my age. So I'm just going to put, I'm going to put 50. And so, let's see. So I plan to retire then at 65. So that gives me 15 years to continue to work. So I'll leave that the same. And then here is where we would put the trend in your family of how long people tend to live, to what age. And so 85, I think, is okay for me and my family. So if I retire at 65 and I live to 85, then that will give me the amount of years in retirement that I'll need to have money. And so I don't even want to put the inflation. We all know that we have inflation. I don't even want to put that yet, but I want to calculate just to see if I have everything, how much money without the inflation that I need right now to have available by the time I'm 65 and retiring. So can y'all see that number? Mm-hmm. That $1,260,000 to cover my $5,000 worth of bills each month. But as you know, we do have inflation. Inflation is now running about, on average, 3.2. Okay, so I'm going to recalculate. So if you notice with the inflation, now I need to have $2,819,000. Okay. But you see the amount went up, and at the time that I retire, that 5,000 that I needed with that inflation added in is going to equate to 8,000. Do you see that? Okay, so does everybody have that amount in place when they're looking at their retirement? Do you have some millions set aside for that? Mm-hmm. Because that's what, you know, that's the way it's going to look. Maybe not the exact amounts, but what we do when we're talking about investing your money, we're going to fill it in here so that we can help you make a goal to get as close to having that amount of money as possible. So if we were to put your money somewhere where it's going to earn 10% interest, then how does that affect that amount that you need to have? Okay, it took it down a little bit. So that's 10%, but you can get, there are different ways to get different percentages. And so what we're doing is trying to get you as much as we can under the circumstances based on whatever your goals are that we're trying to get you to, because anything that you can invest in, of course, that's taking that amount down to a lower number that doesn't look as bad as all of that money that it was showing initially. So I just kind of wanted you to have an idea about what that looks like in expenses and what you're going to be working toward when you're putting a plan in place for your money. So does anybody have any questions on the what if chart? Like I said, you would put your information and you would get your numbers. But I just wanted to give you an idea of what we're looking at when we're talking about saving, because a lot of people are not saving these days. And so it's really important. And so I'm going to go ahead and all right. And we're going to go ahead and start the presentation because it's about understanding your money matters. Let me get full screen here. Okay, everybody see that okay? Okay. So who we are, we're under the census umbrella because Tony, Marilyn, each of us, we have our own business, but we're going to operate under an umbrella so that we can work with different carriers. So that's what census represents for us. And so what we do connect people with many of America's leading financial product providers. So those are insurance carriers that we work with. And so we're not captive agents. So what we do is connect people with whatever carrier is best going to benefit them and give them the best coverage and give them the best returns on investments. So we don't have those limitations in place. And I'm definitely serious about the mission because we are on a mission, and it's actually called Mission 10,000. And what we do with that mission is we do want to get in front of as many people as possible to let them know the options that they have when it comes to finances, because there is information that's been kept from many of us, and I don't want it to be a secret any longer. So that's why I'm always eager to talk about this information. And so we do have many different people from many different backgrounds that work with us and do what we do. And that ranges from, the work that they do. We have, accountants, we have teachers, nurses, caterers, policemen, we have firemen, just a wealth of different people that come from different backgrounds. And then we like to have different age groups and different cultures. All of that is what we have working with census. And so what we teach are going to be 4 steps to financial strength, the basic financial concepts. These are just day-to-day decisions that you're making about with money when you go out each day. And then basic insurance concepts, because many people don't know that you can actually make money with life insurance. They may think of it as a death benefit only, but no, it has evolved. And so insurance can also help you grow your money. So if you weren't aware of that, we're going to talk more about that tonight as well. And so we definitely believe in protection. We believe in protection of your income and protection of your family. And protection can come to you in the form of insurance because, excuse me, because a lot of people will have insurance on their car. They'll have insurance on their appliances. They'll have the health insurance. They'll have cell phone insurance. We all carry the cell phones. But more times than not, what they don't have is protection on what we consider the most valuable asset. Does anybody have any idea what we consider the most valuable asset? Because that would be you and your ability to make money. Because if that is not happening, then we really don't have a lot to talk about. But we don't really think about the protection. So if you're working, and this is an X curve, it's just showing our lifespan, you know, between ages of 25 and 45, we're going through life and we have where our assets are increasing because you're probably getting out of high school, possibly going to college, possibly getting married, possibly having kids, a home, car, all of that is going on. And so those are going to be your working years where you're putting money in place. But if you don't have that money protected and you can't earn income, then what does that do to your family dynamic? So that protection is very important in those early years. And then by that same token, in the latter years, as you're working toward retirement and possibly not working anymore, you're going to still need to protect the income that you have earned and make sure it's not sitting somewhere where you have a chance of losing all that you've worked for all of that time. So the protection part is important. And so we've kind of abbreviated it and fit it into 4 steps. So we're going to talk about very quickly here, 4 steps to create financial strength. So step 1 is to manage your money wisely. Don't spend more than you make. And I know that sounds pretty common sense, but most of the people I talk to spend more than they make. You'll hear conversations about, you know, I'm past my budget, you know, I'm out of my budget, but they really don't know the exact money amount that would put them within budget. So we want them to be, I guess, very aware of what money amount that they're going to be setting aside and using and spend, how they're spending it, and work within their budget, because it's hard to have a stable financial situation if you're not budgeting. So that should be part of what we are doing on a daily basis. You do need to manage your debt. And a lot of times that's going to be those little dreaded credit cards that I know I've been challenged with. And you're going to want to understand how that works, in that you end up paying so much more money than anything you bought on sale with that credit card. You want to create an emergency fund. I had never heard of an emergency fund before I got in this line of business, but an emergency fund is where you cover 3 to 6 months of your expenses, that you have enough money sitting somewhere that you can easily get to it, and it would cover for 3 to 6 months. Because if you don't have any money sitting in place, when this pandemic happened recently, then you're basically going to be in a soup line on day 1 if you were affected and you don't have any money to go and pull from. So it's very important that we consider having that emergency fund. And a lot of times you want to keep it separate from your savings account and use it for what is really considered a true emergency, because oftentimes where it says here we need to set financial goals, if we're not doing that, if we're not planning out our goals for each year, what we call an emergency may not necessarily be an emergency, but more like the failure to plan. So if you're driving your car around and you know within a certain amount of miles, those tires are wearing down and you've gotten to that point, then you want to go ahead and start planning and putting aside a little bit of extra money for that. So it doesn't have to become an emergency. When it actually happens, you just go get the money because you've set that in your financial goals and plans that you have. And then step 2, we did talk about the protecting of your income and your family. And that was pretty much more in the way of having a life insurance policy, which is protection. But you want something in place so that when those what ifs happen, you're prepared for that. And when another form of protection that has come about, it hasn't always been here, is what's called living benefits. And that means exactly what it says. These are benefits that you can access. This is money you can access even though you're still alive. This money would normally go in a life insurance policy to your beneficiary, but these benefits have been a wonderful creation that has evolved with the life insurance product. And so what it does is it allows you, if you are ever diagnosed with a chronic illness, a critical illness, or a terminal illness, that you would be able to have some money that you can access that you didn't save up and that you didn't have to have the policy for so many years to get access to. But it's just a way that you can have this money without having to go into your pocket to, pay towards your treatment. So chronic illness, you can access this money if you are unable to perform at least 2 activities of daily living, because there are 6 activities. They include bathing yourself, continence, dressing yourself, eating, toileting, and transporting yourself. So if you can't do at least 2 of those for 90 days, you can actually put in a claim and get a percentage of the face value of your policy accelerated to you while you're still alive. And that to me is a big deal because our health now is being challenged with GMO foods and all of these toxins and things going on. And people are, suffering at younger and younger ages. So at least this will help, provide some extra money so you won't have to spend your money when something like that happens. And oftentimes people tend to file bankruptcy due to an illness, and they really, just use all of their money paying back these medical expenses. So with these living benefits, that will help alleviate you having to get to that point to where you're having to file bankruptcy. This chronic illness category covers Alzheimer's, which is what my mom had. Had we had a policy like this, we paid buku money for people to come in and care for her. We had CNAs that came in, and it did cost quite a bit of money. But had we had these living benefits in place, that would have helped tremendously. And then if you have a certain qualifying event that falls under critical illness, so that would include events like heart attack, stroke, invasive cancer, ALS, blindness, end-stage renal failure, paralysis, arterial aneurysms, central nervous system tumors, AIDS, and major burns and loss of limbs. So if you have that happen, this is another time that you can have that money available to you. We had one school teacher, she was 38. I mean, she is 38, or she was at that time, that she had made an appointment to get a policy that would have these living benefits, but life happens and something came up. She went into her doctor for one condition and came out with a diagnosis of breast cancer. And so she wanted the living benefits, but it just, it happened before she had a chance to get this in place. So that's one thing that I tell people to do. Make sure, when you're going to get this coverage and protection in place, get it in place sooner rather than later, because you just never know when these unforeseen things are going to happen. And so she's, doing well, but she did not get that opportunity to get this type of protection in place. So a lot of people, excuse me, a lot of people think that insurance, comes later, like when you're 50, they want to think about getting that in place. But like I said, she was only 38 and didn't expect it. And so I think sooner is just better than later when you're looking at things like this. And then step 3, accumulate assets. We do want people to really look at the effect of inflation and the effect of taxes and the effect of risk, because these are things that eat up our money. And oftentimes if you have, funds set aside, or your employer has, a 401k or some type of pension plan for you, you can look at that amount of money and say, okay, I have $500,000 that I can take into retirement. But one thing you aren't considering are these factors that are going to eat away at your money. So even though you see that 500,000, that's not going to be what you're going to actually end up getting to spend, because taxes will take up like 40% of that. So you have this 401k plan you're looking at, but it might end up being more of a 201k plan by the time inflation and taxes and risk have chiseled that money down. So that's why we tell you to be setting aside money now, because of things like that that eat away at it. But there is some good news, because we have compound interest. Compound interest is an amazing thing. It's better than simple interest. Simple interest is tied to like a savings account, even if it's a high yield savings account, which is, going to be the preference there. But compound interest really is where you want to sit your money. So we'll talk more about that as well. And then step 4 is to preserve your legacy. Because like I said early on, you don't want to work all of these years and build up your money, and then it doesn't get into the hands of the people who you want to have it. You don't want to stay tied up in probate court, because even when you have the best of plans in place, that can still be a challenging situation to go through. And I can speak from experience there, because my two adult girls, they're having to probate 3 different properties right now. And the executors aren't really doing their job and just really dragging it out. And so you want to make sure you take care of as much as you can while you're alive. So that would include the things like having a trust, having a will, having a living will, whether or not you want to be resuscitated, having power of attorney paperwork in place so you can get information, whoever's you're acting as power of attorney. So all of those kind of things you do want to get taken care of. Now, we don't handle this particular part, but we want to make sure that you know that this does need to get done. Because I recall back when James Brown had passed, they had his casket in his home, somewhere at his home, and not buried where it needed to be because of what they were having to go through in probate. So we definitely want to avoid that. So we do believe that the one big difference between the truly wealthy and ordinary Americans is that the wealthy understand these money matters. They understand these concepts and how they work, and they're using them every day. So yeah, they understand how inflation works, how compound interest works, and the rule of 72 we'll talk about in a second, and how taxes work, and how the risk, stock market risk, all of that can just crumble away your money when you had a good plan in place. So we want to really understand these different things that you consider when you're making decisions about your money. So inflation, I know we all know about inflation just by walking into the grocery stores. So it's an increase in the price you pay for goods and services. In other words, it is a decline in your purchasing power. So at today's prices, say if you went into the grocery store and you had $100 to spend, you might come out with maybe 4 or 5 bags of groceries. And 30 years ago, that same amount of groceries cost you only $46. And 30 years from now, it's expected to cost you $257 for that same amount of groceries. So it is indeed a myth when people talk about, well, once I retire, I can live off of less money. That simply is not true because of inflation. So if you're saving up for something, and by the time you get the amount of money that you thought it took to purchase something, because of inflation, that amount would have increased as well. So you still wouldn't have enough money. You'd have to save more. And so, so we have to consider and look at inflation. So there's interest and there's compound interest. So interest is usually the price that is paid to use money. But that compound interest, what I told you about earlier, is when one earns interest on the interest, in addition to interest on the original amount. So you're getting more money in a shorter period of time when you're earning that compound interest. So that's always going to be something you're seeking out when you're looking at places to put your money. And so when we talk about this next item, this concept, the rule of 72, it was Einstein that said, those who understand the rule of 72, they're going to make more money. If you don't understand the rule of 72, you're going to make less money. So it sounds like it would be to our advantage to understand, well, what's this rule of 72 all about? And what it is about is that it tells you the approximate number of years that it's going to take for your money to double. Your money doubling is a good thing. So dividing 72 by the annual rate of return on your investment will tell you how many years that it's going to take for your money to double. So let's look at this investment. 4% is what you can earn on this $10,000. And this is someone that's age 34. And using the rule of 72, that means it's going to take 18 years for this money to double from the 10,000 to the 20,000. Now, I don't know what age you are, but 18 years is like the full life of a teenager. And so that's a long time just to wait for your money to double. So if you look at a 6% return in the same situation, now it's only going to take you 12 years for your money to double, not the 18. But if you're looking at supplementing your retirement, you know, early retirement, you only have $40,000 there. If you retire later, you only have $80,000 there. And statistics show that when people retire, they tend to live at least 15 years from the time they retire. So $80,000 lasting you 15 years, I don't think you're going to make it on just that. Looking at the 8% return on investment, now it's only going to take 9 years for your money to double. So that's better. So that's what you're going to be looking at. So at least down here you have 6-figure income, but that's what you're looking for to get this highest rate of return on your money so that you can make more money than just having it sitting in a savings account where you're only making that fractional interest that you can hardly see. You can actually make some grown folks money with this compound interest. And so another thing that we talked about eating away at your money is the taxes. You earn your money, you earn your paycheck. They're going to tax that. You're going to be filing income tax. You spend your money at the cash register. They're taking that sales tax from you. You invest your money. There's capital gains tax that you're taxed on that investment. And then when you die, they tax that too. If you had a certain level of income, they're going to tax you on that. You can't even die to get away from having to pay all of these taxes. So it's so ridiculous, but we have to think about that, you know? And so the timing of the taxes then begins to matter. That's an important thing you want to consider. You have your tax now category. That's your, your paycheck, however you're earning your money in ordinary income. And then you have tax later. That's earnings that you accumulate tax deferred. So you're not having to pay taxes right away, but at the time you withdraw the money, then you do pay the taxes on the money at that time. So that would be accounts like your 401k plan, your pension plan, your IRA, your 403b, your teacher retirement system. So those are things where you don't have to pay the taxes right away, but you will have to pay them. And usually about that time is when you retire. So you're having to shell out all of this money at a time when you're kind of on a more fixed income. Then there's a third category. This is the one I really like, and it's called tax advantage. And this is where your money is still going to accumulate tax deferred, but when you go to access the cash, you're going to pay 0 taxes on it. So this is a legitimate tax loophole where the earnings that you make on the money is not considered income, and you can legitimately not have to pay any taxes on this money that you are taking. And that comes in the form of a cash value life insurance policy, also known as a indexed universal life. So it's abbreviated IUL. You may have heard more about it when people are talking about becoming their own bank, which you can definitely do, or infinity banking. All of this you can definitely do, but many tend to not know about it. And you have like your lower and middle classes carrying the weight of the tax obligation because the wealthy are not paying this. They have these millions and billions and they're not paying any taxes on that money. Coach Harbaugh, I don't know if anybody's football fans, but Coach Harbaugh, who has coaches professional football right now, but he did used to coach at Michigan, University of Michigan. And what he proposed to them was that he kind of split his money and invest in an IUL and not take all of his paycheck and just take part of it and let the other go be in that IUL. And, of course, he was able to earn all of this money, not have to pay taxes on it. He was doing the compound interest. And he was the highest paid coach during that particular year that he did that. And same thing with Walt Disney, when he first came out with this theme park idea, the banks weren't sure that, he was going to be able to return money on a theme park because they didn't have them at that time. So he was not able to get as much money as he needed to open it up. He went home and took out his cash value policy and proceeded to take the rest of the money from that. And that's how he was able to open the theme park. So this is offering, checking a lot of boxes when you can invest in this type of product. You do have to qualify for it, but if you can, like I said, do everything earlier rather than later. But it's with this product, you're also getting those living benefits. You're getting the benefit of that compound interest. Your money is growing and it's growing risk-free because this has a bottom to it. So if the stock market is mirroring the stock market. So as the stock market is going up, your money in that account is going up. If the stock market crashes, you don't crash. You lock in to whatever amount of money you had in that account at that time because you have a 0.25 bottom. So at minimum, you might not make a lot of money, but you won't lose the amount of money you already had. So that is a big deal as well. You're not going through, we all know the stock market does the up and down thing, but you're not having to climb out of the negatives and you hopefully get back to where you were. Some of us might not have time to get back to where we were. And so this becomes, like I said, a really, really good tool to put your money in because you have all of those advantages. And so this last part is about the risk. The stock market, you can get some good money in the stock market. You might have some advisors that are, really good, or you may go through that investment of learning, how to read the upturns and downturns of the market. But we just want you to understand whether or not you can afford to invest and understand how it works if you do. So say if you had $100 in an investment and that investment had a 50% loss, then your $100 went down to $50, right? And so that same investment had a 50% gain in the second year. You would initially might think, okay, well, I'm back to square one. Had that 50% loss, now I had a 50% gain. Makes sense. But no, that 50% gain was only on that $50. So you only gained back 25. So you're at 75. You're not back at where you were before. So that's what you have to understand with the stock market. Whatever your loss is, for you to get back to where you were, it has to be 100% gain. So I tell people, it's fine to invest. We're not against the stock market at all, but just understand that if you're going to need that money to pay a bill next month, then that means you basically cannot afford to be in the stock market because you could lose all of your money. So that's just, a rule of thumb to think about when you are in the stock market. So I've said all of that to say what we do, we teach these basic financial concepts. We want people to understand that you don't have to have all that money just sitting up in a savings account, because I've come across that when we were reviewing policies with people, that they have all of this money in the, which is a good thing, but it's not sitting in a place that's going to give them the maximum return on it, simply because they don't know. They don't know about it. So we want to make sure that's known. So we show families how they can accumulate more wealth, how they can budget, how they can set aside money, how they can plan for these emergencies. And we have a special tool that we use to do that, which works pretty well, because, everybody needs a checkup. We go in and have our health checkups. We take our cars in for a checkup. You have people come out and check your air conditioning before that heat really sets in, to make sure it's going to be working fine. And so this is a personal financial checkup. And so we go through your goals, and we go through, whatever you have in place, whatever you have in coming into the household, whatever you have going out. And we look at the big picture. We're not just trying to quote you on some insurance. You can go anywhere to get that done. But, when you're out looking at where you're going to put your money, make sure you're talking to those people, like I said, that are going to help you plan for the big picture. And a lot of times, you can save money just by having your information reviewed, and we can get stuff at a lower price, or we can make the combination of things happen. So, you can get your plan designed to do what you want it to do. You can even pay on a policy, and after 15 years, you can stop paying on it, because if it's this kind that's gaining money, it's going to continue to gain money without you even having to pay for it. But if you don't know these things and you're not having your plan designed, you may be just in investments where you're tax heavy in paying capital gains tax. So that's going to, eat up your money after you've made all that money. But if you have it sitting somewhere where you don't have to pay any taxes on it, then that's more you get to take home. So just knowing these basic concepts can help you determine, what risk you want to take, and do it with based on some numbers. So I've actually had people that have retired, and they were looking at an age, 65. Okay, I can get Social Security or whatever other resources that they had. But I'm here to say that, yeah, don't look at the number. The age. You look at the number of money that you're going to have, and if that's an amount that you can work with as you go into retirement. And that's what we help you to identify. We know how to look at the information you give us and tell you how much insurance you should even have. That's what most people would like to know. How much do I really need to be fully protected? Because most people are underinsured. And like I said, that's not a problem if you're not having those what ifs come up. But if they do come up, you do want to, like I say, still continue to live comfortably. So you want to understand, how much do I actually need? Because we do have, a colleague that works with us. Her brother didn't want to get any insurance. A lot of people look at that as that's a waste of money. I could have more money if I wasn't paying these premiums. And they're not thinking down the road, because everybody's good until you're not good. And so this is, something that we think is important, and having a plan. Most people who have some kind of plan in place really fare better financially than someone who doesn't. And it doesn't have to be expensive. There are so many advantages in doing this early on. And really, you can set up your children. We have the $1 million baby product, where you can set up your children where they will accrue, enough money to be a millionaire just off of the passive income that they can get through these type of products. So, and then of course, what what we wrap it up with is we give you a financial solution. This is your goal because we want you thinking about those things that maybe not will happen, they'll happen later, but you have to start thinking about it now so you have the time to be growing your money now. And that's kind of what I've seen with, the millennials and the whoever came after that. I don't all those categories, but they're just not setting aside the money. And as a rule of thumb, you should really set aside at least 10% of your annual income each year, or your age times 10, and make sure you're putting it in the best place. Explore different options because and be open-minded. Everybody has a relationship with money that's come from whatever your experience has been in the past. And if you've heard all of the sayings of that time, money doesn't grow on trees, and no, we don't have money for that, but whatever experience you've had, that has to be overcome. So that presents a challenge for us as agents to make sure that we can help people understand the importance of that. I would even go so far as, looking at these investments as placing value on your family members. And I just feel like it would have probably been a little bit different if more people had policies. And when we have all of these accidental shootings and killings, if the insurance carrier was having to pay families out these big sums of money on all of these accidents, they would appeal to the government that, hey, y'all need to stop all of this killing because we're losing money now. When you're talking about losing your money, then that gets people's attention. And so all of these concepts can help you be in a better place where you can participate in generational wealth transfers. And that's what many other cultures have been doing for years, but our culture tends not to participate. And it really is a simple process as long as you start it early and, remain disciplined. We can do it too. We can do that too. And so basically, this checkup really gives us a lot of information to help you. And I think what I was going to mention is you can have more than one financial planner because they're not all created equal. Most financial planners will push whatever product that they have in their repertoire, and it may not even include insurance. So now you've missed a whole bucket or basket. When we say putting money in different baskets, you've missed a whole basket over here where you could have had tax-free retirement. And so, and things keep changing too. So something else can come about that, might have not have been around before. So it always pays for you to have annual reviews of whatever investments that you have in place, making sure there's not something better that would work for you. And so you can have more than one financial advisor, because some advisors won't even talk to you unless you're at a certain level of income. Some advisors will charge you a consultation fee. So those are other things that you need to consider when you're out and about and trying to establish your plan, your financial plan. And so ours are done at no cost, no obligation, just giving you the information saying, this is our best recommendation based on the information that, we've been given, and you can take it or leave it. But definitely, always look to have some type of plan in place so that when the time comes when you are job optional, like I said, you don't ever have to stop working, but if you chose to be job optional, you'll have that money in place. and you would have known early enough to have the amount you want. So I don't want you to be limited. So I think that's basically it. It's just a good idea to always evaluate your situation first, so you know what you're working with, and then just put the best plan in place. So we've covered these 4 steps to create financial strength. So at this time, I am going to open the mic for any questions that you might have, because I probably left out something that you might have had a burning desire to know. So does anyone have any questions about what I talked about or something that you wanted to know? I'm going to go ahead and stop sharing here. Okay, any questions at all? Is that Pastor Josie on here? I'm so happy to see you.
Yes, it is.
How are you?
I'm doing well, thank you.
Great for joining in.
Yes, it was wonderful. I thoroughly enjoyed it.
Oh, well, good. I see Tammy Moore. I know you've been on before, Tammy. So what are your questions?
I am curious about the insurance policies. Say you come across someone who does have a little money set aside, but they're later on in their years, and they have they sign up for a policy. Are they able to pay the policy up front, or does it have to be a monthly payment? Does it have to be a schedule? I know there's a limit to what you can put into certain accounts. So how would that work, for example, for an IUL?
For an IUL, they can make annual payments. Well, there's a minimum target and a maximum. As long as you're not exceeding that maximum, then you can, pay it up. Well, usually people will pay it annually, but yeah, that's one way. But you don't want to go above that maximum, because then it becomes taxable, and that defeats the whole purpose of you having it. And you really don't want to get an IUL if you're not going to put at least target in there. Like if you're just trying to pay minimum, that you'll end up kind of running out of money. It doesn't accomplish really what you're needing it to. So the IULs are best used when you can afford to pay between target and maximum, or maximum. And it really will, that money will really double in higher numbers. But like I said,
the maximum is determined by the amount of the desired policy, correct?
And your age. Yeah,
okay.
Whenever we run the quote, it factors in, the age. So the pricing goes up every year. So the older, or I don't want to use older, more seasoned you are, the pricing is going to be higher. So yeah. So today is going to be cheaper than any day beyond today.
Thank you.
But yeah, that answered your question. That's a good question. All right, Mr. Christopher, what you got for me?
Well, good evening, everybody. As said, my name is Dr. Christopher Span, and I love these presentations. And I guess, I'm on the mature side of life. And so, as Mr. Tilley knows, early in my life, I was an insurance agent, so I understand some aspects about it. But then I didn't really take advantage of it as I possibly can now. And so my struggle is, like I said, not only, what kind of business plan could I get? At the same time, I've opened up my own business. I've left, the job market to open my own business. So I'm actually trying to find a way to secure working capital so that I can eventually maybe invest in things. Because right now it's like, you can't invest on zilch. So
Mhm. Exactly.
that's my struggle right now.
When we're having these meetings with different people, that's something that we just kind of brainstorm because I mean, you can't basically you need more money. If you don't have money to invest, then maybe we can explore different things that you're gifted with that you can make money doing. And a lot of people sometimes don't think about that because you don't want to take on 10 more jobs. You need passive income. So as much as we could think about doing passive income, or whatever is going to bring you more money to work with. Um, we just have that conversation and see what we can come up with. Um, Another way you can do some things is oftentimes we have family that don't even have insurance policies, and families are always passing the hat or doing the GoFundMe. But if families even came together and started pooling their money together to grow, like I said, with that compounded interest, with that advantage of not having to pay taxes on it, and for everybody who's participating in it, you split it out equal. So I guess it has to be people you get along with to do something like that. But
Which is not an option for me.
okay. So what so your type of work you're doing nonprofit, you said?
Yeah, I'm starting an after school program. I work with kids, and I'm doing an after school program. That my whole focus is, as I've learned in my 38 plus years working in the field, is that the educational field has damaged our children. They're not educated enough. They're graduating worse than when they went into school.
Mhm.
And so I am committed to, you know, turn that around for our kids. I have some proven products, which is one reason why I no longer work with the school system because it caused too much conflict. They want me to do things like they do, which is not effective. And so my works. I've had numerous success stories with it. And so now I just have to, again, the other thing that I struggle with is I'm new to the area. I'm from Pittsburgh, so I'm new to LA, so nobody knows me. So that's the other part I'm struggling with is that, so I'm networking now,
Mhm.
so that can help me either sponsor me, support me, collaborate with me, contract me, so I can build capital, so I can invest and not only support the business, but also support eventually if I ever do retire, which I don't see happening right now. So I have no desire to retire right this moment.
Okay, so in your case, I I would say things like you speak well, you're already providing information and working with the kids. You may can do like speaking engagements. I mean, something that would tie in closely where you can get paid. Um, Even in I guess what I'm doing, because I had a good retirement, but when my
Mm-hmm.
mom took sick, I mentally I just couldn't work day to day like that. And so I end up having to spend it at a time when I was needing to still be working. So I mean things happen, but what I had to do, and this is just my own personal thing, I started going to a lot of network mixers, meeting people.
Mm-hmm. That's what I'm doing now.
Okay.
But again, that goes back to I agree with you. One of the things I want to do is provide myself. I have a wealth of information in various aspects of holistic lifestyle, eating, understanding addiction, conflict resolution. But as I state, nobody knows me. So like I said, met Mr. Warfield and a couple other people. So I'm trying to do that. And so that's what I mean. It's like, I'm trying to meet people to say, hey, I'm this new guy on the block, come let me speak. And unfortunately, some people says, oh, well, we can't pay you, but come speak anyway. I'm like, you know,
Yeah,
yeah,
it's
yeah. Well, what's the old saying? Why buy the cow if you get the milk for free?
mm-hmm.
And my milk is excellent.
Right, right. Well, I can't get into all these details because your situation, we have to
That's
set up
right.
a one-on-one.
If anybody has any, I've left my contact information in the chat. I'm open to suggestions. Um, I've learned that a person who doesn't listen, not open to suggestions, as my mom said, they should have died yesterday. And so I'm a person who's alive. So if somebody wants to talk to me, or even if you're interested in what I have to present, give me a call. But so here I am.
Right, right. Yeah, well,
It
like I
reminds me
said,
of Les Brown.
oh, really?
Oh yeah, so that's great potential there for sure.
Mm-hmm. Yeah, we're just the coming together, getting the word out, tell everybody,
Mhm.
about your plight and you'll, start making those contacts because I have so many more great contacts now. Be
Well,
intentional, I
pass,
guess.
pass my information on, please, ladies. Or call me up.
Yeah, you said you put your information in chat.
Into the chat room, yes.
Okay. All right. Well, anybody who wants to take that information, he's made it available. But any other questions? I know I'm over. Didn't realize. Anybody else have any questions, comments about anything? Is everybody's relationships with money good?
Mhm.
Otherwise? Okay. Well, Um, I won't hold you, but yeah, if you need to talk to somebody, of course, get in touch with Tony and he will direct you from there. But um, but I appreciate y'all's time and attention. Hope I wasn't too boring, but um, but hopefully you learned something. And we need to share the information. If you don't want to share it personally, of course, you can say, I know somebody. And you can contact Tony, you can contact me, and we will definitely call. But we just start from where you are,
Mhm.
making a plan. And sometimes, God always is intervening. So
Mhm.
sometimes you come up with some really good ideas that you might have not have heard before. Because I'm sure results or information is always coming. It's just depending on how my hearing is doing that day. So, but we work with you and try to do the best that we can.
Say I like these presentations. The one that I want to do is partner with these presentations because with the kids I work with, as I said, it's holistic. I work with their families too. And so I want to give them a financial background
Mhm.
also. So even meeting, I work with the kids and so they can come in and actually present to the adults, so they can, eventually at their, because most of my parents are in their 30s and 40s, they're at the prime age, and one thing about our community, we don't discuss this stuff around dinner table because we're not aware of it,
Mhm. Right,
So,
exactly.
but that's the other aspect where I'm involved because as we grow, my parents will get involved. And so they also could benefit where they can keep the information that I start continuing with their children and it becomes generational wealth.
Mhm.
Right, right. Yeah, but I mean, doing collabs is really good too. And that usually, like I said, leads you to other tracks of people that you ordinarily wouldn't have come directly in contact with. So it just takes a little bit of work. I know we're getting, like I say, more seasoned and sometimes you're just tired. But you have to keep going until you make it. I'm not a giver upper. So we have to just figure it out, just become more creative and make those contacts. I mean, this is all extra. This is just me talking. But people want people to talk to. When we go out and we're recruiting, people are so anxious to have a conversation. You just have to get them started and let them know you're going to listen to them. And so you can find out so much from people. And that information may come out. Just Just have to put forth that extra energy. I don't know if it's a way around that, but I hear your plight, and but we still got to find a way to make money. We gotta find a way to set aside something to make that money and do it passively and work
Exactly.
together. Mm-hmm. Yes, yes. So really, that's all I have. I'm not I'm not gonna hold you all. And thank you so much, like I said, for being intentional and getting on the call and continue to follow Tony in his workshops. He has some really good ones going on.
Yeah, he does. And this was good. I would look forward to. I do participate in his various workshops, so this one was great for me because it was like a kind of refresher, and then a different aspect of it, a different slant, so to speak. And so I really enjoyed your presentation. I can listen to it over and over again. I'm sure I will gain something additional from it. So, and that's a good thing. Thank you.
I just want to be helpful, and I'm glad you did get something from it.
I did.
Yeah. Anybody else have any questions? Shantae. Oh, okay. Yeah. She was the 100th follower. Do you have any questions on your situation?
I have to step away now, but thank you.
Okay. Thank you for joining. Yes, I'll see you again, I'm sure.
Thank you.
Good evening, everyone. No, I don't have any questions, but wonderful presentation. Thank you.
Okay. All right. Thank you. Y'all have a good evening, and we will see you next Tuesday, hopefully. All right, Miss Tammy. All right. I need to stop the recording, I guess. Let's see. Oh, Annette. Okay.
You still trying to figure it out, Linda? So I've been watching. I was watching you from YouTube the whole time,
Were
and I
you really?
and I had everybody else.
No.
I had everybody on YouTube watching you,
Oh no.
and I was like, "Well, she's kicking some butt because if they're still on asking questions, then she must be doing something right, right?" So
Oh my gosh. Okay, so that was like my thing in the fire.
that's all right.
Something.
I'm going to let me go ahead and stop the recording and stop the stream.
I've been trying to.
You probably can't because
Oh, because I was trying. I hit more, and it didn't even give me that option. That's where I thought I went before. Didn't even
uh
tell me. And then I hit record, and it says record to computer, record to cloud. It doesn't say stop the recording. So now I don't know what to do.
Okay, this is interesting. So, did you already cover this information for Dr. Christopher?
What did it say? He said he put his information in there for us to take it
He did,
down.
yeah. He
Okay,
did.
well let me look at
I
it.
enjoy these presentations, yet my concern is twofold. I do not have a plan for an immediate retirement. In fact, I do not see myself as retiring. I have opened my own business and have invested my savings to set up my business. I need not only an investment plan, but I need investors to assist and possibly partner with me to acquire immediate working capital. This is what he was
Yeah.
talking about. I am a 501c3 program. How can this information assist me in my business? I have grant writers, but grants take time to acquire. Anyone who is curious to discuss, my website is that information and his phone number. And Shantae, thank you. Still trying to figure it out, Linda? That's me on there. Thank you. All right, okay. So I definitely talked to him
Yeah, we
about
did
that.
we addressed it on the call.
Yeah. So I was, and I'm gonna cut this out when I get ready to upload it.
Oh, I got to get on that other call with Tawana and I forgot about Dimitri. They supposed to be
Oh,
doing
you better get on that then. Handle
practice.
business.
Yeah.
I'll see you shortly. I'll take care of this.
Okay. Did I stop it yet? No, it's still going, right?
No, because I'm stopping.